Hey guys, it's that Dividend guy coming at you with another dividend investing video. So today I'm going to be doing something a little bit different. I'm going online and I'm finding articles. This one's by the Motley Fool that might give you ideas of where to put your money to outperform in a market crash or a recession. So, just a little background on me, real quick. I already do this. So, the investments that I pick are a dividend growth companies, companies with a stellar dividend increase history, being dividend aristocrats, which those are stocks and companies that have increased their dividend for 25 or more years consecutively, every single year for 25 or more years. So, examples of these would be AT&T, Walgreens, and Pepsi. So these stocks have increased their dividends for 25 or more years. Then there's another, this is like the elite status dividend kings. They have paid and increased their dividends for 50 or more years. Examples of these would be FRT, Coca-Cola, Procter & Gamble, Target, Johnson & Johnson, 3M, Stanley Black & Decker. They are the cream of the crop, like the top tier of dividend income appreciating stocks. So my goal as a dividend income investor is to find the best companies that have paid the dividend for the longest amount of time and haven't faltered. So that's kind of the goal for my portfolio. And the reason I do that is because dividend aristocrats tend to fall less than the overall market. So if my portfolio is padded up with these dividend aristocrats or kings, theoretically, my portfolio would fall less than the overall market. And then there are stocks that do even better than dividend aristocrats or kings. Think of stocks that you would go to if the economy went down, like discount retailers or utilities or consumer products, stuff that you're going to have to buy regardless. That's where I want to put my money. So as I said, I'm already kind of prepared for a recession. I've always invested like we're in one for the past 2 years, even though we haven't been. So let's take a look and see what Motley Fool has to say about 3 recession-proof stocks to buy now. Keep in mind, this is Motley Fool. I'm just reading the article. I'm not giving you buying advice. Any wins or losses you're responsible for in the market. I'm not a financial advisor, so I can't be held accountable. This is an investment advice. I'm just reading an article. I'm just trying to find more economically friendly stocks for me to buy and get new ideas for myself and my portfolio so I could have more money in some of these picks if I like them and focus on quote-unquote recession-proof stocks. So, like I said, I wouldn't be surprised to see discount retailers on here like Walmart, Ross Stores, Dollar Tree or Dollar General, and then some medical stocks on here like Johnson & Johnson or Pfizer or Amgen, maybe some utilities like Duke or Dominion, or American States Water or Waste Management, and then stuff like Procter & Gamble or Kimberly-Clark or Colgate, people who make companies that make toothpaste, deodorant, that mouthwash, body wash, that type of stuff. And then also Sin stocks do very well in a recession. So Beverage, Altria, Philip Morris, so gambling stocks, that type of thing. So let's take a look and see what Motley Fool has to say. So the recent stock market meltdown driven by the C virus has fueled fears of a recession. That's not surprising given that we've had one full decade of incredible bull market runs ever since the last recession, yet there's no knowing what can drag the US economy into a downward and most importantly into a downturn, and most importantly, the best thing you can do as investors to prepare for a recession, which is what I said I was already doing. One way is to invest in some stocks that are recession-proof or simply strong enough to hold their footing during tough times. 3 such top recession-proof stocks to consider now are Waste Connections, WCN, Next Era Energy, and Johnson & Johnson. This stock defies a slowdown like none other. A solid waste management company, Waste Connections is a solid, pardon the pun, stock to own in a recession, given that the amount of waste we generate doesn't depend on the economic cycles. I believe Waste Connection is a hugely underrated company that's given a phenomenal performance over the years. Like I said, Waste Management or Waste Connections, they're in the same sector. Waste Connections collects, disposes, and recycles non-hazardous waste in the U.S. and Canada, serving more than 7 million customers in 42 U.S. states, the six Canadian provinces. That's also a key player in energy and production or oilfield waste management through its R360 environmental subsidiary, with operations in major shale bays such as Permian, Bakken, and Eagle Ford basins. Waste Connections primarily uses two-pronged approach to growth: exclusive service provider agreements that ensure a steady stream of income, and acquisitions to tap into new markets. In 2019, the company made 21 acquisitions. Jeez, for roughly 3.8 million, or 838 million, which helped drive revenue up by 9.5% to 5.4 billion, and the cash from operations up by 9.2% to 1.5 billion. Net income rose slower 4% because of taxes and impairments. The estimating remaining life of Waste Connections landfills is almost 26 years, which could go up to 29 if the company wins pending expansion approvals for 9 landfills. The E&P space is hugely promising as well, with 12 dedicated EP landfills. Waste Connections, in fact, has a stronger toothhold on the EP than the largest management company in the U.S., Waste Management, which is what I thought would be on here. That's the company I've looked into. I've never actually heard of Waste Connections, but I might look into it after this. 9 of Waste Connections municipal solid waste landfills also receive E&P waste in 2019, reflecting a growth potential in E&P. For 2020, Waste Connections expects revenue to grow higher, at least 6%. That could be much higher if the company makes any acquisitions, with the company also increasing its dividend by 15.6% last year. Definitely got to look into this company. It's that I usually go for consistency, but like dividend increases like that make me want to look into companies. Waste Connections is the top-notch stock to own when the market's crashing. A utility dividend stock with renewable energy focus. It's well known how defensive the regulated nature of the utility business is. Utility stocks are a great option to bank on during a recession. What you need, though, is a stock that also has a strong growth and dividend potential to ensure that you have at least some flow of income during every downturn. NextEra Energy is such a company. While NextEra delivers electricity to traditional way for more than 5 million customers through its 2 subsidiaries, Florida Power and Light and Gulf Power Company, it also constructs and operates power plants and pipelines and sells electricity through its subsidiary NextEra Energy. The difference is that NextEra generates nearly all of its electricity from renewable energy sources, and it's the world's largest producer of electricity from the wind and solar category today, having invested more than $20 billion in renewable infrastructure over the years. Such a large-scale utility and renewable energy operations makes NextEra Energy a top utility stock to own. The company has grown its adjusted earnings per share and compound annual growth rate to 8.4%, and its dividend has grown at 9.4% since 2004. That explains the stock's stupendous performance through the period. Jeez. With NextEra planning to invest $12 billion to $14 billion each year through 2020 on various growth projects, including wind and solar technologies, to lower costs, earnings could grow steadily, add potential double-digit annual dividend increases, and at a decent yield of 2%. NextEra makes a compelling low-risk stock to buy. Healthcare won't fall if the economy falls. Johnson & Johnson's business mix is built to withstand storms. Pharmaceutical, medical devices, and consumer healthcare are all products that will fit the demand no matter how sluggish the economy is, as healthcare expenses aren't really a choice. Johnson & Johnson's the world's largest healthcare company. I own them. I have 2 shares. In 2019, J&J generated $82.1 billion in sales, half of which came from pharmaceuticals products in this segment, covering infectious diseases, immunology, oncology, neuroscience, and cardiovascular, among others. Medical devices was the second highest largest selling segment, contributing roughly 1/3 to J&J's 2019 sales. Here's a fun fact: 26 of J&J's products generate $1 billion of sales each. Jeez. J&J has also prioritized organic growth over mergers and acquisitions, which is why it spent $11.4 billion on research and development in the last year. The company also believes in sharing its success with its shareholders, which is true. J&J has increased its dividends every year for 57 consecutive years, with the last bump being a 5% increase in April of 2019. That J&J stock raises its dividends even during recessions and recoveries swiftly are proof of its resilience. J&J has at least 10 new molecular entity fillings of launches lined up by 2023. J&J's latest program, which includes expended research to develop treatment solutions and vaccines for the C virus, is a great example of the company's innovative leadership in healthcare. in virtue that adds to the appeal as a recession-proof stock. So again, as I said, Dividend Kings and Aristocrats can be considered recession-proof because they have a great, stellar track record. That's why I love Johnson & Johnson. It's actually my favorite stock. So those are 3 ideas, guys. Again, not a financial advisor, but I called it. I said that it would be utilities, which NextEra was, waste management, which I've actually never heard of Waste Connections, so I'm going to look into that one. That last dividend bump sounded pretty good too, but I don't know how many years they've increased. But anyways, guys, there are 3 ideas to recession-proof your stock portfolio. Again, not a licensed financial advisor. If you decide to put money in these stocks and you lose it, it's on you. But these stocks have a track record, and that's what I look for as a dividend investor. So thank you guys so much for watching. Remember to hit the subscribe button on my YouTube channel. I post about my portfolio every weekday, and I'm going to try to get videos out to you on Saturday and Sunday, stuff like this as well. So with that being said, hit the subscribe button, hit the bell notification so you don't miss any new portfolio updates or videos like this where I try to help you guys find other investments. I'm just trying to help people that are freaking out about the virus. So thank you guys so much for watching. I'll see you guys in the next video. Take care. Keep your head on straight. Remember, red in the market just means you should be buying. So I have the inverse kind of thought process on recessions or downturns. I buy when the market's red, so it gives me a higher dividend yield. So take care, guys. Stay calm, and if you can buy on the dip, go ahead and buy. So thanks, guys. I'll see you guys in the next video. Take care.